You want to know why the stock market's down. And you also want to know where some of these stocks are headed next. Should you buy now? Should you wait? Is a bigger sell-off happening? Now, I don't have a crystal ball, but I do have 25 years of stock market experience, and I'm going to do my best to bring you some data to help you with your decisions. I'm going to tell you why the stock market is down today, some things to look for. We'll also cover rapid-fire earnings highlights for Shopify and Datadog and look at charts. And we're going to look at 3 more charts of market leaders, fired up wealth favorites, including Nvidia, to tell you where the stock might be headed next. You can see right across the board, it actually was worse than this not long ago, about an hour ago. VIX has spiked, but still under 15. Why? Well, inflation. Consumer Price Index, CPI, a little hotter than expected. Came in at 0.3% in January. Expectation was 0.2%, annual gain of 2.9%. So we came in at 3.1%. That is down from 3.4% in December. Now, if you look at this, you go back to 2022. In June, we were at 9%. And you can see it's come down nicely. We're sitting here at 3.1%. And overall, this is good. Now, if you look at less food and energy, 3.9%, all items, 3.1%. And shelter prices actually accounted for much of this rise, climbing 0.6% in the month. That's about 2/3 of the headline increase. So important to note. And on a 12-month basis, shelter rose by 6%. So your rent, your housing, the cost of living is higher. In Discord the other day, I talked about how round numbers matter. So you get to something like $100 on a stock price. It deals with psychology and buyers wanting to maybe trim, sometimes even buying. But when the market's ripped really hard like it has, you get the S&P 500 at 5,000. It really is looking for any excuse to cool off. And I will say that a little bit of a sell-off is healthy here. The overall market, a lot of names are getting a little bit frothy. Now, what's interesting about that is those market leaders that seem ridiculously expensive, those actually went from red to green. And a lot of those names are green. We're going to cover a few of those in a second. All right, so CPI up, of course, Treasury yields, those are going to spike. We're going to have growth stocks. It's going to be risk off. That's what's going on with the market today. Now, I'm going to show you 6 charts, and I want you to understand these are just possibilities. If the overall market rolls over, all of these charts are going to roll over as well. We're going to look at areas of support, and if those areas of support break down, you could see much lower prices. Now, let's look at the Nasdaq 100. We're looking here at the Invesco QQQ ETF. Now, anything you see in orange is a previous chart day. We do those every single Wednesday in Patreon Discord. Yellow is today's chart day, really today's YouTube video. Right now, you've got 424 support on the Qs, and it's currently trading at about $430. I posted this earlier in Discord. It was $428 then. We're at $430, so we're holding that support by about $6. It's possible that we go even higher. The R3 here is almost at $450. It's at $448. Now, on the downside, if we break that support of $424, you could see something like $414 and $407 first. And if you look at something like the 200-day moving average, we're way down here at like $360. So I had this circled up for several weeks here saying, depending on the data, the earnings data, the macro data, CPI, you could see some gyrations, and here's kind of the range you're looking at. Now, the first stock I want to cover, Datadog dropped this morning. Actually went from pretty red to last time I checked, it was almost green. You can see it's down about 2%. But if you look at this morning, the low was 123.50. Now at 132, so almost a $10 move. Now, the reason for that, earnings weren't bad, but the guidance was a little bit light. The company projects EPS of $1.38 to $1.44. That's below the consensus of $1.78. And the revenue expected range, $2.55 billion to $2.57 billion. The consensus was $2.59 billion. So again, a little light. Now, Datadog's earnings overall, non-GAAP EPS, 44 cents. That was in line. Revenue, $590 million. That's up 25.8% year over year. Beat by 21.7 million. Now, Datadog is interesting like a lot of these because you look at the moving averages. This is the 50, the 100, the 200-day. We're way above those. We're getting above this Fibonacci retracement. You look at the Fibonacci pivot points, we're just below this R2, but the R3 is actually all the way up here. This is about $150 a share. So in yellow here, I've got 124 support. 149 plus is possible. So this R3 is 149.12. It really needs to hold $124, which it did this morning, basically broke slightly below it and then popped up. Shopify also had earnings this morning. It was down about 13% and has recovered a little bit, but not as much as Datadog. So Shopify narrowly beats Q4 consensus expectations. GMV growing by 23%, revenue 24%. So non-GAAP EPS 34 cents, that beat by 4 cents. Revenue $2.14 billion. up 23.7% year over year, beat by 70 million. Looking ahead, Shopify anticipates revenue growth in the low 20s% range year over year, or in the mid to high 20s range when adjusting for the 500 to 600 basis points impact from the sale of the logistics business. You might remember that news not long ago. Next, we'll cover a chart of Shopify. But before I go on, drop me a comment. Let me know. Did you buy either Datadog or Shopify this morning on the dip? Now, with all the stocks that we're going to cover today, we were buying these in Fired Up Wealth Discord for much lower prices. It's definitely the place that you want to be. Check it out. There is a free trial. Head to patreon.com/Fired Up Wealth and join us free for a week. Now, what's interesting about this, guys, and I'm not trying to make direct comparisons, but the last time I had to move my camera to the bottom right-hand side of the screen was in 2021. We've got prices so high up here. In order to show you the prices, I have to move my camera from the top right to the bottom right-hand side of the screen. When the stock prices were down here, I could have my camera on the right-hand side and talk about it. So just something to be aware of. You know, a lot of us were buying stocks like Shopify at much lower levels, and now it looks a lot different. I mean, we're basically breaking down here on earnings at the R3, so it shouldn't be that surprising to have some consolidation when you're above all these moving averages. You're above the retracement, the Fibonacci pivot points, pretty much elevated above everything. And you go back to some of these charts. I mean, this was a $23 stock. This was just October of 2022. And now today, even after the sell-off, it's around $80 a share. So Shopify above Bollinger Band, it topped out on the R3. It is vulnerable here. So it needs to hold $77. It's trading right now around $79 a share. If it holds 77, you could see $90 and $100 on the upside. If it breaks down and it gets below 77, you could see something between 67 and 71. I'll try something different. I'll move the camera over here. So everybody wants to know what's going to happen with Nvidia. Is it going to go higher? Is it still a buy now? Here's the chart. What a monster rip. You know, this was a pound the table buy, $150 or less. We've said it many times on this channel, on this YouTube channel, and in Discord. In 2022, I brought out a video that said Nvidia stock is a must-own stock for any portfolio for AI. This was March of 2022.
Today, we are announcing the next generation. The engine of the world's AI computing infrastructure makes a giant leap.
This stuff right here, guy, I'm telling you, as someone who's really into technology, I can just nerd out on this stuff. I mean, we are going to a whole nother stratosphere when you look at the H100 chips and what these things can do.
Introducing NVIDIA H100. The H100 is a massive 80 billion transistor chip using TSMC 4N process. A single H100 sustains 40 terabits per second of I/O bandwidth. To put it in perspective, 20 H100s can sustain the equivalent of the entire world's internet traffic. Let me highlight 5 groundbreaking inventions.
I mean, Jensen, you can highlight as many inventions you want, but you already got my money. They blow your mind and they get you excited as an investor. And I'm not one to like hype things up, but I'll tell you what, like watching this makes me very, very bullish on the future of Nvidia. It makes me want to even have more shares of the stock. And of course, you know, since those prices, the stock has done very well, and it's $729 a share today. So make sure you are subscribed to this channel if you're interested in tech stocks and you're interested in finding stocks that can make moves like this. Subscribe, click that bell for notifications. Nvidia, honestly, guys, it's going to come down to earnings. According to TradingView, next Wednesday, the 21st of February, you're going to get earnings from Nvidia. Now we're seeing analysts come out with revised price targets all the time. Just this morning, I saw another one. Mizuho Securities raised the price target. Of course, you don't buy a stock off of analyst price targets, but it's important to understand. Analysts are pumping the stock higher. They're still telling you it's a buy even at these levels. Now, of course, for us, 150 or less was the DCA area. Most of us loaded up then. I'm looking at areas to trim at this point, and I've owned the stock long since 2017. So cost basis in the 30s, you know, should I sell it at 700, 800? Either way, 900, I'm making good money on this stock, right? This is not generally where I like to buy stocks. And for the most part, these charts today are going to look like this, but I'm showing you possibilities of what could happen based on technicals and momentum. And oftentimes you'll see a stock that will ride momentum and go higher, but it could always come back lower later. And it's going to depend on the data, the macro data, the earnings data. So $850 plus on the upside, and the downside, who knows? You could see it back under $500. I mean, I think the stock could easily go much higher, but of course it could drop. You say, well, that's not helpful. The stock might go up or down. Yeah, it depends on the data. The charts aren't going to tell you. The charts can tell you possibilities. I will say this, headed into 2024, I said that this was headed to $600 plus as long as earnings support it. The price at the time of this was $450. So when it was $450, I said it was going over $600. It's now $729. And I'm telling you now that this could be $850 or even $1,000, or it could miss earnings. It could sell off below $500. And that's really the possibilities you're looking at. And it depends on the data. The charts aren't going to tell you that. In fact, the S3 is $412 and the R3 is up basically where it's trading at now. So that's Nvidia. Obviously, it's the market leader. And there's FOMO. You got to do what's best for your portfolio, but it's going to come down to earnings. Let's look at another semiconductor stock. Semiconductors, the new oil. Let's look at AMD. So AMD, same as last time. Basically, it has $158 support. Probably goes to $200 plus on the upside. In fact, the R3 is up there at $213. Now, looking at the earnings, you could easily make an argument that the valuation doesn't support it. In fact, if you were to look at Nvidia and AMD side by side, you might say that Nvidia is still the better buy today versus AMD. And I know that's going to be controversial and polarizing, but it's a fact. Go look at the P ratios, the forward P ratio, and it's going to depend on earnings. Nvidia could come out and blow earnings out of the water, and it actually could lower a lot of those metrics and make it less expensive. The big question is when does the steam run out? When does that pricing power erode? When does competition come in? When does the demand start to decrease? Right now, there's not much end in sight, but there will be an end to it, and the stock's going to go up until it doesn't. It's going to come down. AMD is really riding on the coattails for future AI. I think that AMD will be 15 to 20%. I'm long on both of these stocks. This is another one, $65 was kind of the level we were buying AMD. Another stock that was $54 back in October. Everybody wanted to throw it out in the trash. And now today, just a year and a few months later, people want to chase it at $170 a share. CrowdStrike's another one. This was a $90 stock, just January of 2023. We're talking about 13 months ago. It was less than $100, around $90 a share. Now the stock is $325 a share. People are still buying it. This one went from red to green, as well as AMD and Nvidia that we just covered. So 277 support on CrowdStrike. This is another market leader. It's got momentum. You probably see 330 and 348 as possibilities in the upside. It could get some resistance around that $350 level. Round numbers matter. And I say here that I'm trimming a little bit at $350. I think I raised that slightly, but I do have quite a few shares of CrowdStrike. And when I say trim, I'm talking about if I have 320 shares, I'm selling 10 or 20 shares, something like that. Is this format helpful? If it is, drop me a comment. Let me know, and I'll make more videos like this. Thanks for stopping by. Drop me a like. Have a great rest of your day. Take care.